What is up, guys? I'm back here again with another one. Today, my student and I will be discussing the characteristics of a highly probable zone. Sit back, relax, and enjoy. Over here is where I'll be triggered into the market. But now, remember the criteria I just gave you, right? In terms of this zone holding. So what did I say? I said we want to look out for liquidation. We want to look out for impulsive candles coming from the zone. Market structure, right? And we want to see is then there an engulfing candle, is there an imbalance, all those things. So now let's look out for those things. First, I see a line of sensitivity, and I'm just going to grab my horizontal line and I'm going to make it red, right? Remember, I just don't want to delete my pendings because these are just annoying to then put them back in. Okay, so right here, can you see this is a line of sensitivity right here? Why? We got there, we dropped. Got there, we dropped. This is the H4 time frame, right? You got there, we dropped. Broke above, got here, we went up. It's just if each time price gets there, there's a reaction in the opposite direction. Are we together?
Yeah.
So now, the chances of that happening when we get here are high. But remember, I also leave breathing room in case they want to be funny. That's why my stop loss is all the way there. See what I'm saying? So I want to be triggered in as soon as we get there, and then I just chill. My take profit is here. So now, if we were to assess how much this risk is $167, right? $156. If all things go well, I'm coming out with $342. But that is just my provisional take profit. To be honest with you, I want to hold this trade even somewhere around here. Should get up like 500 US. See what I'm saying? If things go well, it's all about risk management at the end of the day. You understand what I'm saying? So I'm patiently waiting for that. So now we can see we're talking about decorating our zone to make it more high. We want to look out for the highly probable zones. And we said line of sensitivity. Can you see? There's a line of sensitivity at the zone. That's one thing it has already ticked, this beautiful zone of ours. Now, also impulsive candles coming out of the zone. Now, can you see over here, right? This movement to the downside is very impulsive. Can you see that? This is 1, 2, 3, 4, 5. This is 40 hours. No, sorry, my bad, my math. Jeez. 25 hours of just selling action. And that selling action, where did it start? It was generated in here. So if we come back in there, it's highly probable that there's still some selling orders. Even if you need to understand, even if maybe the selling orders are simply not there, we can expect a little drop. You understand? At least maybe 2 here, then the market might want to continue. But can you see that with that little drop, your stop loss would be at break even and you would be fine already. Do you get what I mean?
Okay. Hold on. Your stop loss would be at break even. What does that mean?
Yes. That means that we have entered the trade here when the market has started going in our favor. You then move this stop loss to your entries so that the trade becomes risk-free.
Okay. Okay, I understand.
Exactly. Cool. So we have the line of sensitivity. We have impulsive candles coming out of the zone. Is there an engulfing candle? Unfortunately, not for this one. Market structure, yes. In terms of market structure, we're well in line because we can say this is a high and this is a lower high, right? And we expect the price to come back there. So yes, we're well in line. So we're ticking these things, okay? So liquidation, right? What would a liquidity scenario look like in this instance, right? That would be, let's do this. We would want a resistance before we get into the zone. And I'm hoping it's provided here because remember, you're trying to sell there. So they're going to give you a little profit to lie to you a bit. That's how the game goes. You know exactly where you are, right? So this is where you are, Leseko, and you want to sell there. You're going to sell, and then the market might actually drop a little bit like that. And then you think things are going to go well. Guess what? The market then moves up again, right? And then it starts playing around here, right? And guess what? That zone finally breaks. When it breaks, what do you think happens here? It's a resistance breaking, and that fuels people to buy, right? So now that's that liquidity before or near our zone. That makes our zone even more attractive for that sell. Are we together? So there's no resistance yet because we don't have one. We only have one. We don't even have like 3 or 2 or more hits. Let's just be patient and see what happens. If the price struggles here and it finally breaks above, it's going to make this zone beautiful for us. Are we together?
Yeah.
Okay, so what the hell have I done there? See, Leseko, you're messing up my trades. Can you see?
I'm doing.
Okay, cool. All right, so you do see what's going on, right? So we just looked at one example. It's an analysis of what you had, right? I think on the H1, you picked up yours on the H1, which is okay. You are saying, I don't know, I think yours was a bit further, but this is not one we want to participate here.
Are you saying that there was going to be a liquidity grab where you drew these arrows because it's happened previously around about there where the green line is?
No, yeah, there's potential.
Yeah.
There's potential because it's a selling order block.
Yeah.
You understand? But in my opinion, I don't think it will hold enough for that. It might just drop the price, right? But maybe to here. You see what I'm saying? That's hence what I'm trying to show you here. Okay. Cool. Now let's look at volatility 10. That's another one that you analyze. We're looking at this criteria. This criteria is going to help you. It's going to make you start to see the highly probable zones, because I've told you, on many occasions, it's all about probability, right? Once you master probability, you're done, because that's all it is. It's, if this happens, what am I doing? And how am I making money out of it? If this doesn't happen, or blah, 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 you're just really assessing the probability of certain outcomes. That's what trading is all about, okay? So now let's look at, let's look at volatility 25, okay? So with volatility 25, I also have pendings on. This one's going to take forever. I can see that we might have to wait a bit. Okay, but anyways, let's go to the monthly time frame. What do we have? On the monthly, we can clearly see once again that everything is to the downside and we are definitely going down. Are we together? All right. That's all we have. We just have a sea of, in fact, let's look at the waves of a market, right? We have impulsive move, correction, impulsive move, correction. So we're currently in the impulsive phase right now. We're going to expect some downward movement, but even with this downward movement, on the lower time frames, the market does not just do this, it moves in waves. It will be forming lower highs and lower lows, because if it's moving down, it's forming a downtrend on the lower time frames. So it's our job to find a nice premium for us to join this wave of this impulsive leg. Do you catch my drift? Right? So now, we are going to scale down to the lower time frames. But before we do, I'm actually seeing, right, that there is a level whereby if we are to retrace into there, I want to even sell more, and it's here. This nice monthly line of sensitivity I'm drawing here. You see this?
Yes.
We got there this other month and we moved up. Got there this other month and we moved up. So you see where my pending is? It's strategically there. But, obviously it's not as clear on the monthly. Let's go to the weekly. See, now we go to the weekly time frame, and boom, this is what we have, right? Everything in terms of market structure is aligned on the weekly. But now, let's look at the most recent high in this downtrend. It's over here, right? Are we together? And that's the zone we really want price to get in there. And then we sell the living hell out of that price, right? But now, out of that market. But now, remember, what are the things that we look out for near or in here that could make our zone more beautiful? Can you talk to me? What do you see that we can use? Let me just delete.
It's an area where price bounced upwards from, first of all, and there's, I don't know if they're lower lows. Sorry?
Hello? That terminology, what do you mean area? Yeah, can you hear me?
Yes, I can hear you. In that order block there, I mean, that's where price couldn't break through from. Every time it came there, it went back up. I don't know if it's a support or resistance.
So what is that? A line?
Is a line of sensitivity?
It's a support.
Yeah.
Yes. Remember, I was discussing the things I made you write down before the session started.
Yeah. So there's line of sensitivity, and there's is that a candle? What is that? Engulfing red candle. Engulfing bearish candle.
So now you see, it's well done. Now you're on the ball. First things first, let's not rush it. We have a line of sensitivity here. Can you see this horizontal line? Right? We have touch up, touch semi up, and then we dropped. Right?
Yeah.
This is happening at that high point. At that high point, we also have this bearish engulfing candle. At that high point, if we scale down to the lower time frames, I'm sure there's impulsive candles coming out of that zone. Look at that. Can you see that? These things are starting to line up. Okay. You see? So this is what makes this area a highly probable zone. You know what? It's very easy to start trying to play for these small moves here. Because look, it looks like you're making money until the market gets to somewhere around here and then still reverses and continues up. If it gets here, it's like almost 80%, or not even 80, bro, like 90% you're going to make the cash. But it requires patience, like I always say. Do you understand what I'm saying?
Yeah, yeah.
People are not patient. Yeah.
Because I was wondering then, why did I make that mistake earlier? I see now that we're on a different time zone. You're gonna have to move that order block down a little bit to fit into that the green candle.
Yeah, you can. You see, yeah, we call that purifying the zone a bit. So yes, definitely. Now that you see, that's why it's called a top-down analysis. You want to look at all these time frames. Okay. So now on the daily, because that was the weekly candle, this zone here, we can actually use this rather, right? Because it does make sense that the market will want to come here. Right. Can you see now? This is where my pending is, either way. First things first, this zone, gray zone, encapsulate that line of sensitivity over here. There's a bearish engulfing here, right? Okay. There's impulsive candles coming out of there. Such that, look, as soon as price gets here, there's no one who can convince me in this world not to sell this thing. Are we together?
Yeah. Okay.
That's it. So we have seen an engulfing candle. We've seen impulsive candles coming out of the zone. In terms of market structure, we are well in our way, right? There's a high over here. Okay. Cool. We have a lower high. We have a lower high. We have a lower high. Lower high. It's fine. Do you understand? So we are, for this one, we're actually ticking everything. We have an imbalance as well. There's the imbalance by that line of sensitivity. Look.
Yeah, actually.
Last opposing candle before that impulsive move and the candle closed there. That's an imbalance. So imagine a setup where there's an imbalance, there's an engulfing candle, market structure is satisfied, impulsive candles coming out, line of sensitivity. The only thing that's left is if liquidation occurs. And in my opinion, it's likely to occur somewhere over here. Why? Because this is where you, Leseko, might want to sell if you're an amateur, thinking that that's where the drop is coming from. You see what I'm saying? So what happens there if you sell there is simple. They will actually give you a little selling activity that's just like that. Then it will act like a resistance. Then boom, break above resistance fuels a type of behavior in the market whereby people are buying, in creating enough sell side liquidity, because if you want to sell something, you need a buyer. And then the market drops. Are we together?
Okay.
So
I understand why not put the order block there then.
All right. So there you have it. In other words, look out for lines of sensitivity, impulsive candles, engulfing candlestick patterns, imbalances, and liquidation near your zones of execution. Until next time, ciao.